Just going to share my screen and then kick this off. Yeah, hello everyone. I'm very glad to have you all in our first session of Nikhil's Investor Lounge with Ntasha. Before we come to it, I just wanted to briefly introduce you to Dudash and what we do for those who might know it. And then I will give it over to Nikhil, Ramon, and Ntasha here. So, what is Dudash? We are working on the biggest challenge that most founders actually have, which is the access to capital. Still to this day, many founders don't know how to go through the rigorous and complicated fundraising process, how to convince and talk to investors. And with that problem in mind, we launched Dudash. So with Dudash, we are building a digital investment platform to streamline and automate the complicated fundraising process, make it simpler and enable both founders and investors to focus on what matters. While we're still building our core product, we already launched the Dudash community platform to help you already become investable and receive funding. And with the community platform, we help you through free education, success stories, making an investor ready via expert feedback, but also through our global community and having events such as these. And we're going to go into that very soon. Already with Dudash, we're going to help you connect with relevant people, finding co-founders, validating your business idea, joining events such as these, but we also help you already to give you feedback on your pitch deck, checking your investment readiness, which we do for free. In addition, we also have startup credits from partners, and we also already do an interim version of that investment readiness platform that you're building to help you prepare in a more one-on-one scenario, preparing you for fundraising and then actually getting in front of investors and doing the process. If you're interested in that, reach out to me. Yeah, that's basically it as a quick introduction just on Dudash. If you want to learn more, just visit our website or just send me an email. And with that, I would give it over to Nikhil to introduce the others. And yeah.
Hey, welcome everyone to this first edition of my Investor Lounge series. And I'm so happy to welcome Ntasha from Venture Gurukool to participate, be the flag bearer of this first ever event which I'm hosting. So let me first quickly introduce my co-host, Ramon. He's joined us. It's very early in the morning for him. He's joined us all the way from San Francisco. And this is a truly international venture conversation. So let's dive straight in. Ntasha, so you are the center stage. You're on the center stage. We're going to ask you some amazing questions. So let's get started. Are you ready?
Yeah, look forward to it. Seems interesting. And great to be part of your first ever Investor Lounge series and hope many more to come out of it.
Thank you so much. Thank you so much. So for the sake of our audience, they need to really understand what Venture Gurukool is all about. Just tell us a little about Venture Gurukool. What exactly does it mean? Venture, I think most people know on this event or people participating in this event, but what would be very interesting for us to know, what does Gurukool mean? It sounds cool though.
Yeah, yeah. Well, it's the abbreviation for Gurukul, Gurukul. So it comes from the ancient teachings in India, where the prince and the princess used to stay with their mentor at a particular house or location, and get inculcated with all the education they needed to basically become rulers, or even for some of the noblemen to send their kids to this Gurukul institution. So it used to be away from their palace. And I think the first aspect of living in a Gurukul was to inculcate the principles, the right set of principles which a person should have, because those are the founding blocks for any individual, barring the education which you receive over and on top of things. If you don't really have the right foundation, right? You don't really, your knowledge is wasteful, So the concept of Gurukool was you used to come and stay at this, you could call it a hostel in the modern times, and really imbibe, the principles of your life, the philosophy of life from these very learned individuals who were masters in various disciplines, right? So that's the concept which we wanted to take for Venture Gurukool, which is focused on early stage investments and barring investments. You have to sort of do a lot of hand holding for early stage ventures, the seed, pre-series A, even some series A. So that's where we come in. We're an institution which provides these mentors which have different expertise in terms of the functional domain expertise in finance, in operation, in building the supply chain logistics, having worked in large organizations, right? And industry leaders, right? People who are really titans in the industry for, let's say, the digital revolution, right? So we have all these mentors who are, we like to call them gurus, who are associated with Venture Gurukool to impart their knowledge which they have learned from years of experience. So that was the concept of Gurukool. So I just changed it a bit to make it cool, Kool. So it's Venture Gurukool.
It's truly cool. And I think the concept is absolutely amazing.
Yeah.
And you mentioned something very, very important through during your introduction. And this was about the foundation. And I
Right.
totally agree. We at Dudash, we've screened over 4,000, 5,000 pitches, and we've seen that the foundation is definitely a problem. So absolutely fantastic. Tell me something a little about your investment thesis. Where do you invest? How do you invest?
Yeah.
What kind of checks do you write?
Yeah. So I wanted to mention this. So I co-founded Venture Gurukool almost 5 years back. And back then, I had a brief stint in entrepreneurship myself, having studied finance from Lancaster and with a background in energy and resources management from UCL. So I was focused a lot on investments in the new energy generation technologies, upcoming generation technologies in wind, solar, geothermal, these sort of investments in India and Australia. And I had that entrepreneurial spirit. I think it's a part of coming from North India per se, where you have the spirit of entrepreneurship. You want to do your own venture, you want to run your own organization, be your own CEO. So then I started this market intelligence platform, which is one of a kind in India, which is providing market intelligence for petrochemicals and chemicals across various trading hubs in India. So for people who are in the energy industry, they know of Platts, which sets the benchmark for all these sort of trading prices for LNG and various other contracts across the globe, right? So they set a global benchmark standard. So something similar for what's happening in India, because no one was really providing that intelligence and market advisory. But what I realized with the journey was with the sort of investment which goes in to build a network of stringers who provide you this deep industry insight versus what a consumer is willing to pay for. That was a complete mismatch in India. But having done that, after like doing that and launching something which is very unique in India, I was really intrigued with the venture capital ecosystem, and I started co-founded Venture Gurukool almost 5 years back, right? With the philosophy of, like I mentioned to you, Gurukool. So institutionalizing a lot of our proprietary capital in early stage ventures, providing them with something much more than capital, right? Because capital, I think, I understand from your platform, it's really tough for a lot of startups to get the funding, but I think in current times and in present day and age, it's more seamless and people really understand the venture space than what it was 5 to 10 years back, right? To provide something much more than capital. One was mentorship, and the other was the network access which these mentors provided to help you get the first institutional client, to help you get the right industry partners to sort of expand your business in, and even partners for our own co-investor networks, for people with whom we could co-invest with. So I think a lot goes into the early stage investments, barring just capital, because there's dumb money everywhere. You need smart money at the end of it. So having said that, giving an introduction of Venture Gurukool and what we've been doing at early stage is very sector agnostic. So we don't really pick a particular sector, but what our philosophy lies around is the transactional and the the experiential economy, right, which is now being transformed by the tech landscape. So we look at investing in ventures which are digitally transforming this day-to-day interaction. We like to call it the everyday transactions between consumers and businesses on a regular basis, which are being transformed with the tech landscape. So that's something which we look at. So ideally, we look at ventures which are looking to identify a large market opportunity in terms of transactions which are having day to day, in terms of how you are consuming entertainment, how you're getting educated, how you're upskilling, how you're reskilling. So with ventures which are not just doing a simple transaction, but really changing the entire consumer experience around it. And that's what the tech revolution is all about. I think we have gone past a very platform play to something which is just transforming your entire experience of how you are experiencing your day-to-day transactions. So that's the ideal philosophy of what we look at in terms of the ventures which we look to invest. And that leaves us open to investing in fintech, in some services, in health tech, and various other segments per se.
That's incredible. That's awesome. I mean, and thank you so much for giving a very clear landscape of how and when venture Gurukool would invest. But just leaving this a bit aside, we would like to know you as a person, as a venture capitalist, as tell us something about yourself, something funny about yourself. We don't want the usual spiel. We want something which personifies Natasha.
I think it's very hard to define. The only thing I can say is expect the unexpected. So whatever notions or preconceived notions you would have associated with my name or with my persona, it's completely the opposite. So I would say be surprised with the interactions that you have. So yeah, and that plus given my phenomenal, amazing height of 5'11".
You're a towering personality in the true sense of the word.
It's quite unusual for my ethnicity.
Congratulations, you did
Yeah.
well. So, this isn't funny. This is serious business out there.
Yeah.
But even the height is your personality. Your height is a serious business for me. Tell us something really funny about yourself.
Okay. Now, I think I'd just like to add, we have a really interesting office dog in our office, which is an English bulldog. Very fun fact. And we call him Boss. And I feel like, startups are all about, you need to get the feel of the particular startup, it's all about the entrepreneur. I was going to tell about that a bit earlier. So, it's the founders who have the right set of foundations in terms of how judiciously they're going to spend the money and, be cautious with it and everything. And, to have the right connect with the founders. So very funny. So if our office dog has a lot of attitude. So if he really ignores you, that means something wrong. If he really comes up to you and checks you out, means he's got the seal of approval. So that's something funny I'd like to add on our cues to our founder check, if we would like to say it in that particular fashion.
So he truly is the boss.
He gets the right vibe from the founder. So yeah, we need to pay more attention to this one.
So anybody who's looking to raise funds don't have to woo Natasha, woo the boss.
Yeah. So next thing I know, founders are going to be coming in with bags full of dog treats.
Awesome. This is fantastic.
That's a cheat sheet.
I'll let you in a little secret. We also have a chief happiness officer.
Yeah, we also call him chief happiness officer.
You call him boss.
Yeah, his title is chief happiness officer if you look at from a hierarchy perspective.
Wow, that's actually transforming the entire human resource landscape. The boss becomes the chief happiness officer.
Yeah.
Wow. I mean, that's a movement you can start from here.
So yeah, seal of approval from boss is required.
Yeah. So guys,
for the next round of discussion.
And that also means that, I could actually sell. My next startup could be, if I want to raise capital from venture Gurukool, I should have dead cows and tin cans, right?
No, that's just a funny fact. We go beyond that. But no, I think it's really interesting. I actually noticed that, he's ignoring, or he sort of comes and says hello, because I think English bulldogs per se have just a lot of attitude in general. And if he is really not giving you the attitude, then means there's something about you. Okay.
So Natasha, this is really funny, but I mean, I'm so happy. So, but he's allowed in the office, right?
Yeah, he's pretty much there in
Dogs
the
in the
office
office.
throughout
Your
the day.
office is a dog friendly office.
Yes, they're very much dog friendly.
Oh, awesome. Great. I would love to work from there. Uh, Another question. I mean, you just told us that you've been doing this for 5 years, you've been investing for 5 years. I'm sure you've met a lot of founders, you've met a lot of uh, people. You would have gone through like tons and tons of pitches out there. Tell me one funniest pitch which you still remember.
No, I think there's nothing funny, but see, you see these entrepreneurs, they work really hard in terms of working for what they have worked so hard. Possibly they might not come from the right set of background. Some of them might not be from the big cities per se. They must be from the tier 2, tier 3 cities, so they might not really have the right accent, or really can't communicate as seamlessly as some of the other founders who are from big metros can communicate. But I think what gets really boring for us during pitches, I would not like to say funny, but boring, because what doesn't catch your attention is if you're something of a me too. So if you're something of a me too, which there are 50 people are doing it, you already have a number one, number two. I think it's really, and you're looking for funding. See, if it's a cash generating business, fine, you really don't need it. But if you're really looking for funding your bootstrap, and you're really burning your own money, then I think you need to really have a hard look at what you're trying to do, rather than go to a investor yourself and figure out, get some funding externally. So I would say I have a lot of respect for founders, and you can sort of see the struggle they go through, the passion and the enthusiasm they have. So I would not really say funny, but yeah, what's really boring and what really doesn't catch the eye is some sort of a me too company. So I would just tell founders to really try and be more innovative with your vision, and think of something more disruptive.
So think of something really destructive. Not disruptive, destructive. Is that what
Yeah,
you think?
however you want to put it, but yeah, something which is more uniquely positioned.
Awesome. Awesome. So I think the founders on the participants uh, are making notes, because this is very, very important.
Someone has something to say?
I don't know, but I actually just about the personality. And like, obviously, you have a fantastic personality, which is great. I meet a lot of venture capitalists who don't have such a nice personality, so it's nice to see that you're so open and warm. And then about that personality-driven entrepreneur, though, like you said, like not necessarily you don't have to have the right background, but what is it that you're looking for in a founder? I mean, of course, they not only have to sell their own company, they have to sell a product. They have to sell you on investing into the company, but people have lots of different backgrounds, and of course they have to please boss as well. So they have to. What is this? What is it that kind of overall? What are you looking for when that really hard subjective part, not just the metrics and money, but that subjective part where you go, okay,
it's really hard to define that, because it's something not really very quantitative. It's very qualitative. But to put it very plainly, I think founders who have the salesmanship, in terms of they can talk well, they can sell the venture well, they can sell themselves well, they can really to the investors, to possibly their first clients, to some of the institutions with whom they want to partner with. So these sort of things become really important from a startup perspective, from the ideation to an MVP perspective, to really take it to a Series A, B sort of a level, because you really need to be able to hire the right set of people. to convince your customers, your first set of customers to come and buy your product or service, even with some of the institutional partners with whom you need to collaborate with to really get your product up and running. So essentially, I'm actually looking for the founders who can really talk, sell themselves, have that salesmanship. I think that's really important from a startup perspective.
Thank you. So, what about a lot of technical startups? People, most of the founders which you sometimes meet are quite technology oriented, but they really are not salespeople. So, how do you kind of deal with them?
I think a startup team is all about, having synergies and having this mix of both, and I don't really think someone who's just too technical doesn't really have the skill to talk quite a bit, like if you look at the founder of Freecharge, he set up a phenomenal company with excellent salesmanship, which he has in terms of selling the product to the investors, to consumers, and various others. So I really don't think if you have a technical background, that's tough to do that. But yeah, in terms of if you have a technical background, because see, a lot of startups, they really struggle with the product side of it, to build that MVP, which is quite differentiated, to work on the tech side of it, which is differentiated. And a lot of your initial round of investments goes to hiring a lot of these expensive CTOs. So you should have ideally a mix of the two. If you're building something way too technical, right? For a media venture, it's all about technology. If you really want to do something innovative in it, it's not about content creation or something. So if you really build this strong tech platform which is personalized to each individual who opens your particular platform, like the success story of BitDance, right? So that's what's important from that perspective. From a fintech perspective, especially in India, what we look for in fintech founders is they should have the right background of working in the financial industry, right? Because then they have the knack of dealing with the regulators, because at some point or the other, you're going to be requiring an NBFC license or some sort of a banking collaboration. And if you really don't have that maturity to deal with these sort of regulators or the banks per se, then it's really hard for, I would say, a pure techie guy to do innovative fintech startup. So it really varies. And I say the more technical you are, the better, because then you trying and build something more and more differentiative. But having said that, I do agree with you. A lot of these founders find it difficult to explain their particular or basically sell their product or vision to the right sort of investors, right? They can't communicate so clearly. So that's why they need synergies from another set of co-founders, which I'm telling you, a lot of people are looking for tech CTO founders, right? So if they can find synergies with the right set of fellow classmate or ex-colleague with whom they can really work together with, it makes a lot of difference, because that's what's required from founding teams. I really don't believe in one man founding team. You really need a synergy of 2-3 people to really take this venture ahead, because you should really look for complementary skills for those set of founding teams.
Yeah, no, especially in the VC space, VCs don't like solopreneurs.
Yeah. It's really tough. It's a tough ride.
Or something, right?
It's a tough ride, yeah.
Yeah, absolutely. Great. So I'll just take a step back. We've been talking about investment thesis. We've been talking about what you look for in a particular founder. In your experience that you've been investing all these 5-6 years now, what differentiates entrepreneur mindset versus somebody who's not? What is the differentiating element that you see?
The hustle.
Huh?
The hustle.
Just the hustle?
It makes a lot of difference. The founders who have the grit to get going when nothing is working for them, even your investors are upset with you in terms of how you've deployed the money and you've not much traction to show for. The founders who really have the grit to go ahead and really, if they realize they're making a mistake, to pivot on the go and still really believe, like, see, the investors eventually are investing in it because they believe that they like your vision, they like the space you're doing it. Possibly the way you went around it was not quite optimum, right? Or you sort of strayed away from the way which you said you were going to explain. So the founders who have the grit to pivot on the go, who have the ability to not just be so stuck on a particular mindset, in terms of how things have to go, because startups are literally like jump off a roof and then you make a parachute on your way down, So the founders who really have the hustle to get going when things are down and about I think it speaks volumes for the particular venture of how they can sustain. Like COVID has been a downer for everyone. Like it's been great for tech as such, but we can't deny that the lockdowns which we faced curtailed businesses to ground zero, literally, The founders who have the hustle at that times, to really get going, be innovative, be in touch with their suppliers, be in touch with people who they require from a partnership perspective to really maintain the relationship, get going, and even maintain the morale of the team as such, So founders who really have the hustle and the knack to really get going, I think that's what differentiates a founder from someone who's doing a job per se.
Got it. Got it. Ramon, would you like to ask some question here?
Oh, actually, going back to the COVID situation, how did you see that? I mean, I know they had a lot of effect on the VC rounds here in the Bay Area in terms of COVID. How a lot of what would have been like a traditional pitch deck in front of a couple investors had changed to Zoom meetings. Did any of your process change in this last year in terms of how pitching, and also was there any pivot within your team? And if not, that's great, but I'm sure things everyone had to adapt.
No, I think pivot in terms of everybody in the way they were operating and interacting with VC is a very relationship driven business. It's all about having the right connect with the founders, knowing the founders from before, and maintaining those relationships. But I think with this sort of a COVID situation, it put the entire in-person meeting on a complete spanner. You couldn't really do anything about it. And honestly, it's very hard. Like I was telling this to Nikhil also the other day, that I am definitely not a Zoom call investor. So if I don't get to meet the founder, you really don't get that vibe per se, if I could say, in terms of how the founder is like. And you need synergies between the founder and the investor as well, because you're investing in a particular venture to hold it for 8 to 10 years, possibly. That's longer than what you would hold your stock portfolio for, So to really have that right connect and synergy with the founder in terms of you believe together in that particular vision and you are in the journey with the founder together to achieve that vision. So for us, it's been COVID situation has been very inward looking in terms of we've looked at our own portfolio. And of course, a lot of them required a lot of follow-on round of investments because this sort of derailed their entire cash burn situation, right? So doing a lot of follow-on for our own particular portfolio. But it's been very interesting in terms of the new opportunities which have come about it. But at the same time, there's so much uncertainty, even right now. There's a second wave going on in India. You don't know how this will pan out and how things will go ahead. This seems like an endemic, according to a lot of people, according to the people in the pharma industry. So how this will, we're really learning on the go and how this is really going to change the business as usual for everyone in general. But I think overall it's been great for tech because it's really expedited a lot of ventures. You could look at the edtech ventures, you could look at media, which have really grown phenomenally during these times in terms of the users which have come on board. But going ahead, it'll be interesting to see how much of that sustains in the business as normal situation. So it's very uncertain times, and yeah, that's all I can say.
Well, that's great. And then it's in this situation, it's a little hard to get in front of people, but what is the best way to, get that audience? I mean, everyone, of course, everyone wants to talk to VCs. They're hard to, you have limited time, limited bandwidth. Of course, you have your qualifications of who you want to meet with. And so what is the best way to get in front of you? Not even to get the pitch, that way to, get your foot into the door. Like you said, you said you tend to know you tend to know the company in advance somehow or through.
Yeah, so you've been in the ecosystem for like 5 years now, so sort of entrepreneurs. You've been through the networks of these the entrepreneur circle as such. So a couple of them. Like we have looked at some 2,000-3,000 odd startups during this past 5 years, right? So So we've built some sort of a network to be able to at least add a reference to one particular founder with someone or the other. So I would say a best way to reach out to me would be if, through some of our portfolio founders, through those. I think those are always phenomenal references, right? Or be through, like I would say, a mentor network, something which comes through that, which is taken quite seriously. So always look for some of these commonalities in these networks to reach out to us. And I think that makes a lot of difference on how you reach out to us rather than a cold mail per se, And I'm sure, we've, like I mentioned, we've interacted with so many of these startups. We know a couple of them. So if you just come through one of these networks, it's much easier to be taken with a lot more seriousness. And plus, we're very approachable. So so we are there for a lot of these events per se. And
to follow up that you are, like I said, you're much warmer than some of the other venture capitalists that I've met.
Yeah. So we are much more approachable from that aspect. But I would still say, if you come from a reference from any of these founders, any of these mentors, or someone, it's a huge network. If you just one particular person, if you come through with that reference, and it makes a lot of difference.
So if you're in the ideation stage, would you recommend working with one of, before we get in front of you, working with one of these mentors or someone else within the network? So get further along.
We have the mentor engagement with the post-investment phase. That sort of helps us with the post-investment management for those particular companies. But I would say from an ideation perspective, so the only ventures we have funded from an ideation perspective are the founders who we have known with in the past, like through some reference or the other. So we've known them very well, because ideation stage is really very dicey. There's nothing much to show for, and the only thing you're going for is the founder. And right, if you know the founder from before, some reference or the other, like you've worked in a previous organization together, or someone from our founding team per se, knows that particular person very well, that can be trusted, so that makes a lot of difference. So I would say the first round of capital for most of the entrepreneurs is if you really don't have an MVP in place, especially for founders in India who are looking for funding over here, which a lot of VCs require, right, is to have an MVP or some sort of attraction for them to be able to take you more seriously, is to look inwards from your own network. So, the first check always comes from the 3 Fs. You know what the 3 Fs are?
Yeah, we know, but for
everyone else,
you could tell.
I could think of a 4th F too. So, but go ahead. Go ahead.
No, so it's the friends and family. I'll not say about the 3rd F, but friends and family. All right. The friends and family is what you should look at to raise your first round, your ideation capital from, and then once you've got some sort of at least some product in place, that's when others want to take you more seriously. Because honestly, even some cold mails which come in from founders which are in ideation, they just go to the junk, literally, So I would want to be very blunt and tell founders to really look at their own networks and really raise the first round from their friends, from their families, who know them. So it's all about if you know the person, you have that sort of a trust, you can get that sort of commitment from that particular person.
And to give founders an idea, like how many cold calls or cold emails, cold messages do you think you receive, let's say in a week? I mean, I don't think people realize the amount of, how much you're getting bombarded. Like, just give me like a ballpark number you think on average.
I think 20, 30 easily, like which are these ideation stage startups, which, like a lot. I think ballpark, this is what it is. Like what I tell you, it goes in our master database, but we really don't proceed ahead with those ventures because we look at if they have some sort of an MVP or some sort of attraction, a website in place, God's sake, to really take us to the next level. If something is complete ideation, it doesn't really go too far.
Meet the bar.
Yeah.
So, while we are, again, I'm going to take a step back again, and I'm sure there are a lot of people who are listening or who are at the ideation stage. And this is a great segue into my next question, and that is, what are the entrepreneurship ideas that you've encountered recently, which deserve, in your opinion, a little bit more attention, and it's not really getting it?
Oh, for us right now, I think we're looking at where we're actively looking at the insurtech space, right? So we, like I mentioned in the past, we have seen a surge of a lot of platform businesses, but nothing much to really help us do the transaction completely online through the tech frame. Like, so if I give the example of insurance per se, even the online insurance, some of the biggest platforms which are here in India, at the end to close the deal require a call center to close the entire deal. So that's sort of personalization or intelligence has not yet come in to really, from start to finish, do it very seamlessly with a couple of press points to sell this insurance. And I think insurance per se is so underpenetrated in India, with just 3% is the penetration of insurance in India, right? So a lot of it is still offline. And ventures which are looking to transform these offline insurance sales through the online perspective. So that's something which we're very keen and actively looking at in terms of building this intermediary network, which is vastly offline, and aggregate them, not just aggregate them, but onboard them through the tech platform, which makes it very seamless, even for your financial advisor, rather than take a day or two to sell insurance within 10 minutes, because you have the quotation right in place and you can just seal the deal on the go. So a lot of these offline transactions still have huge opportunity for online transformation, and that's something which is really underpenetrated in certain segments where we look at interesting value propositions.
So insurtech being one, anything else which you've recently seen? Generically, not just India, but when you look at a bigger picture, world is your canvas.
Okay, that's too far and wide. But I would say with something which we are very actively looking at is for new age brands, especially with the changing consumer habits which we're seeing in the Gen Z and Gen Y, right? The changing consumer preferences around that. So digital first tech brands which resonate more with the new age consumers. I would like to say 15-year-old guys right now who in the next 8 to 10 years become your major consumers. So brands which are looking to target these new age consumers, because ultimately we're looking to invest in ventures which can last the entire duration of like being there for 8 to 10 years, something which is disruptive enough for a lot of these traditional mainstream brands to not venture into. And there's an opportunity for a lot of these tech startups or food tech brands which are looking to create this opportunity in this space. This is not just true for food tech. There's so much opportunity in terms of cosmetics, in terms of lifestyle brands. It's huge opportunity in terms of how do you create these new age brands which cater to these new young audience. And this is not just true for India, but in a lot of other countries. Like we're looking at MENA also quite actively, and I think there's huge opportunity for something to come out more locally over there. Because as and when we've gone through this entire cycle of what's happened in the past year, right, where the supply chains have been disrupted. So consumers have started to pay more and more attention to for locally sourced goods, which is more local. It doesn't get impacted by something which happened right now, and is not dependent on a country like China or somewhere else for their entire production life cycle.
Yeah, it's amazing that you bring it up, because I've recently been seeing a lot of hashtag vocal for local.
Yeah,
That's
go global also.
huh?
Vocal for local, and then go global with this. So yeah, I think there's huge opportunity, and it's very pocketed. So if you look at India also, like I would say India is beyond just being one country. It's all the states put together, 26 different geographies, which each having such different tastes and preferences. To make something curated for that region becomes massive, so I think there's huge opportunity for these various brands, digital first brands, to really capture the space, to which some of these mainframe brands are refrained from getting in, because it's not tried and tested per se. And this is not just true for India, but for other regions as well. This is something where supply chains which have been disrupted have taught us this. And at the same time, I think with this pandemic, there's been a lot of insecurity, especially in the first world countries, around food and how you consume food, right? So in terms of, there's been a lot of hoo-ha around cell-based meat and plant-based meat, of course, which has a proof of concept and great success stories with Impossible Foods and others. So there's huge opportunity in that, in terms of even seafoods and other things which can come about. The impact it has from a greenhouse gas emissions perspective, and more importantly from sustainability and nutrition, right? So I think there's huge opportunity and innovation yet, which is yet to be seen in that space, which is very exciting.
Absolutely, absolutely. And I'm sure there are a lot of food tech founders on DoDash platform. We've seen a lot of such people around there. Contrary to what you told earlier, and you said, yeah, there's a lot of liquidity in the market. Getting funded is much easier. And I concur with you, because I started my business 25, 26 years ago. And when I put together a nice looking business plan and went to the bank, and I got the shockers of my life. And this is about 95, 96. It's pretty long time ago. Of course, things are much different today. But yet, there's a general perception. It's so difficult to get an investor. Why is it so? Not just the perception, but generally, people feel it's very difficult to find an investment.
I think it really depends on, in terms of, are you talking about more from early stage venture perspective? Because even some of the funded startups find it difficult.
There is
the success rate from going from a seed round to a series C or D is just like nothing, So what is it that you're contextually going to talk about? Is the guys who are trying to raise the first round, or the growth stage guys, or what?
See, I think a lot of people, a lot of founders that we know of, don't get their first money to be able to get to the next level. Series A, Series B, Series C is going to be a function
later
of different other variables which you don't have to bother about at this moment. And this is what I'm talking about pre-Series A, as your fund thesis is. Why is it so difficult to get to an investor?
Okay. So I think, one of the things where I feel some of the founders go wrong with is in terms of trying to explain their particular product, or their service, right? The clarity with which they explain that to that particular investor. So I would say, first, even if you're doing something which is highly complicated, just take up one slide, which is going to be your vision slide, and that could just be something as simple as, if I talk about fintech, like banking the unbanked, I'm just being very generic, So something as simple, as grand, as punchy, as in your face as possible to really grab the attention. And be a little bit more patient with the investor when you're trying to explain your venture to him, and really don't step in the wrong foot trying to act like you know it all. Like, really, we have gone through a couple of decks, we know what we're talking about to some extent, but really be patient with the investor. Though I understand a lot of founders are doing something so differentiated. I know, like, I can talk to some of the companies in our own portfolio who are doing something so differentiated. There are no counterparts for it anywhere in the world. Like, it's so unique for what they're doing, to be more patient with the investor, to really break it down to literally A plus B is equals to C, So make it very simple and simplistic, and really not provide something which requires like a founder to explain it. Just send a 5 to 10 page slide with basic simple things on what your vision is, what your mission is, what your product and service is, what your market opportunity is, and what the founder is all about. And that's it. We really don't want the financials. We don't want the projections or anything else beyond that, to grab the attention of the investor, and just keep it minimalistic to a couple of words, So if you're clear on that communication standpoint, be patient with the investor in terms of explaining what you're trying to do. Like, if you are one of those particular ventures who really doesn't have any counterpart in India or in anywhere overseas per se, to really have that patience to explain that to the investors. You have to take those pains to be patient with the investor.
And what's your firm's general policy, or do you have a policy about like timing, about how long you like to make, from first meeting to make a final decision? And then
No,
is it kind of like, is it like, do you have like
there is no hard and fast rule. It could go as fast to like a couple of weeks to closing in a month to be dragged down to a couple of months. So I think there is no hard and fast rule per se. But yeah, like I mentioned to you earlier, it makes a lot of difference from what sort of networks you're coming in from. You know, if it's if we know you per se, so half the due diligence goes away because a lot of it is founder due diligence, founder reference check, and these other things. So that makes it much more easier for us as well. You know. And then, yeah, if it's something differentiated and everyone is willing to catch a pie, a piece of your business, then yeah, it becomes even more interesting from an investor standpoint. But I would say in a lot of places, it really doesn't make a lot of difference because we really need to believe in what you're trying to do. A lot of people, it might even be some of the biggest investors are really keen on what you're trying to do, you know, but if it doesn't really catch the eye, if we don't really believe in the opportunity in this space, it gets very tough unless and until the founder is just phenomenal, because then I know the founder has the capability to pivot. So I would still, give a lot of preference to the quality of the founder over something what they're trying to do, because I know founders tend to pivot quite a bit, you know, so that's where the hustle comes in.
So, and then internally, does there, how, you know, is it everyone has to, within your firm, how is there voting, majority, everyone has to agree on a certain thing? I think one reason why I picked this out is that I think a lot of startups and founders don't realize, like, there's a process. VCs just think, you know, you make a decision, you cut a check, but there's usually internally, there's a lot that goes on in the background that they don't see, or and the media doesn't talk about.
So I think it varies from the expectation. If you're looking at angel, HNI, or even some family offices, it's pretty much, if it resonates with the family office, you know, they're from that particular background. Let's see, if I'm talking about oil and gas, if that family office has made money from oil and gas, you're doing something disruptive in that, it catches their eye, it's just very fast, you know. But from an institutional perspective, like we are ourselves having transitioned that journey from doing proprietary investments to our own institutional investments. So it's a lot about you have your due diligence in place, you have to do a founder ref check, you know, and then you have to have these thick, long, reasonably sized documents which justify the investment, right? Because it's institutional money, right? So which talks about the market validation of these particular ventures, the opportunity in the space. So it's the big documents around it, you know, and a lot of time which goes to spend at the founder's office to really cross-check a lot of things, talk to their customers. So a lot of things, these things go in place for something called IC, which is the investment committee meeting, right? So that's where unanimously, or it ultimately is, it's one way, yes or a no, which comes in together per se. There's no veto per se.
So it's more like
so
a consensus-driven.
Checks and balances which come when you come with institutional capital, because we ourselves have raised that money, so we have to justify each investment with your all these investment documentation. And while we were doing angel, it didn't really matter, you know, too much, because it was our own money.
Right. And people forget the VCs also have bosses too, which is, you know,
exactly.
in the end, they're responsible to their limited partners who are putting up the capital. So you have to make sure you're not wasteful,
you have the right
or
processes, you have all the documentation in place for it.
And these are not your cute-looking bosses in the office.
No, no. They can get very angry very quickly.
True that. See, I think founders should be prepared to, if they're talking to an angel, they're talking to a family office, it's very different from institutional investors.
Absolutely. So one very quick question which comes to my mind is, money is money, you know. Should one care about the VC brand that you're associating yourself, and this especially for some founders here?
No, I think it makes a lot of difference, because if you go with the right set of people who come in early, right, they are the ones who really open doors for your next round of investors, right? And if you have someone whose rep is not that great, right, it's really tough for you to get that follow-on round, because at some point you will exhaust, possibly you might have exhausted your network to raise your series, pre-series A, or even if you're lucky, a series A round. So you really need those bigger check investors to come in, and the quality of VC investors who come in and really invest in your early rounds make a lot of difference on how your growth stage investors will look like. That's even true for the sort of LPs who are there in the VCs, a lot of them being institutions who are ready to cut really large growth stage capital. So all these things make a lot of difference and makes the life of a founder much more seamless if he has the right set of backers behind him.
Got it. And what are the kind of rookie mistakes that you have seen from the founders who try to approach you?
I think founders who just in general come in blind for the meeting, they really don't like, if I would be meeting them or someone else from my team, like let's say some of our other managing partner would be meeting them, to not really read a profile, because the first 10-15 minutes make a lot of difference of the kind of conversation we have with the founder, because I'm not really interested to know about your venture for those first 10 minutes. I'm really interested to know about you. And if you can't find that commonality which can really lead to a good discussion, right, that it doesn't resonate for the rest of the meeting, to find that commonality, to read about the whoever they're going to be meeting, to do more research around it, to ask the right set of questions, to be look a little bit more prepared and not just come with different set of expectations of what we're going to do.
Absolutely, absolutely. Yeah, it's quite interesting. Often founders forget that VCs are actually your partners, and they're not just money bags out there.
Yeah, no, exactly. And to really click with them, to resonate with them, it becomes important, right? Because it's a long-term play, like I mentioned earlier. It's not short-term. So if you don't have that right synergy with the founder, I feel it's really tough to go ahead.
Because you're going to be a long-term partner as well. I mean,
Exactly.
especially your philosophy is.
We are part of the founding team in a lot of respect, right? The silent founding team or the silent partner.
Natasha, did you get a chance to look at our investor readiness check? The Dudash investor readiness check?
No, I think I missed that, but I did read that mail you sent me around that phenomenal checklist which you have. So why don't you tell us about it?
Well, I think I'll leave it for, I mean, what we can do is let Michael put in the link to that and let everybody go through it. And when people have questions, I don't want to eat away on your time, because I want to take a few questions from the audience also. But before I do that, how should founders reach you?
I think I just mentioned. But all right, no, I'm still very much available. I would say LinkedIn, but it would not go too far. The best way to reach would be through our founder network. So we have a couple of our founders and portfolio companies on our website, or we have a huge set of mentors who are part of our network, or even through you, Nikhil. If you have some amazing founders, please feel free to share them.
Absolutely. We have some amazing founders. We have some, and these are really the deals that we have are beautifully curated. And by the way, a lot of non-resident Indian founders, and they have amazing stuff going on. I know you are a category 2,
One.
category 1
Fund. Yeah.
fund.
Yeah.
So you have 20% of your capital you can invest outside of India, right?
That's true. That's true.
Amazing founders, and they are actually on a good way track. In fact, I know of a company which is actually likely to break even this year. So
okay.
So this is it's right up your alley. I can tell you that.
All right, sounds interesting.
I'm gonna do that introduction, right?
Okay.
Okay. So Michael, can we take a few questions from the audience here?
Yeah, sure. Just gonna go into that. Yeah, maybe you could just like ask people also if they have more questions to just put it in here.
So I see one question for you, Ntasha, already in the chat. As an investor, do you look at specific domains? I think you answered it right in the very beginning, but maybe for the people who joined in late or were admitted late, you could just repeat once again.
No worries. So, like I mentioned, we are pretty sector agnostic, and we're looking at ventures which are looking to digitally transform the entire consumer experience of day-to-day transactions which a consumer has in terms of how they eat, live, sleep, consume things, various things, so get entertained. So this day-to-day transactions which are being transformed by the tech landscape, we call it the everyday economy. So that leaves us open to a lot of sectors in terms of fintech, though we have quite a bit of fintech. So though I don't have a personal bias towards fintech, but yeah, fintech and a little bit of quite a bit of D2C, looking at some food tech brands as well, and yeah, services and various other things around it.
Got it. Got it. So there's a very interesting question which I saw was regarding FMCG. So there's this gentleman called Siddharth Bhatt who asks you that what's your view on big FMCG biggies in India investing in startups? Is it really worthy? If yes, why and what valuations they are playing on? Example he's giving is Marico acquiring Beardo, Reckitt Benckiser investing in Bombay Shaving Company. Your thoughts on it?
So it depends really. I would say it makes sense for a strategic guy to come in a little bit later in your round rather than having a strategic investor right in the very beginning. But I think there are a lot of per se investors who are looking at, I know a lot of funds which are just focused on investing in building a lot of these digital brands or food tech brands per se. I know Fireside is one, and there's a couple of more as well, which have been recently launched, which are just focused on this. So I would say the early rounds is better to go with the VC fund and come in with a strategic investor more in towards the growth stage, because that would make much more sense rather than sit with them since the very beginning. And I don't know how, especially some of the Indian brands, I don't know how well or what's the synergy like with some of these early stage founders and how far they can take the venture per se. So don't go too early. It doesn't make sense to go too early with these brands, and wait it out till you reach to the growth stage, and possibly at a later stage they'll be much more willing to, once you've got reasonable amount of traction, to buy you out completely, like we've seen Drunk Elephant, right, which got acquired by some of the major brands. So it makes more sense to inculcate them at a growth stage, or it from an exit standpoint as well for a founder, rather than come in way too early with these guys.
Got it. Got it. Yeah.
And there are a lot of funds which are looking at building brands, such brands, especially food.
Absolutely. So, Natasha, there's a very interesting question we've, or rather, received. It's looks more like a statement, less like a question. That there's somebody who's driving $40,000 in sales at the moment, but it's a prop tech. Does it fit your thesis?
Yeah, sure. We are very keen on looking at prop tech. In fact, one of the ventures I was telling you about in our portfolio is Home Capital. So they started off with providing down payment financing for first-time home buyers at 0% interest, right? And now they are venturing into, yeah, so that catches your eye, right?
Yeah, absolutely. It's like, okay,
0%.
okay.
Yeah, and now I think they have a very interesting vision of being a digital HFC, a housing finance company, so with what they have launched with. So that's how they have grown with their vision. I think, yeah, definitely we'd be very happy to look at something in prop tech, and if we see some more synergies with our portfolio, then it makes a lot of sense for us.
And you know something, Natasha, what digital, what is our AI that we are baking into our system? That investment committee meeting that you were talking about, you have a memo which you take, right? Your partners, your
Yeah.
So we have a digital or a digital avatar or digital twin of us, which is actually preparing this based on voluntary disclosures. I mean, this whole business is all about voluntary disclosures, right?
That's great.
Yeah. So you press a button and you have the length and breadth of the company, the due diligence being spewed out of the system. Now, what you could do with this system, Natasha, is This due diligence report that you get, you could actually make use of it as a challenger. You could either you have your own system of assessing startups, right? Or you could complement it, hybridize the whole thing. And if this one seems to be better than yours, you could use this as your baseline system. Well, we'll come to that another
That's
time.
interesting. Yeah.
Yeah. Yeah, this is what we are building while we are talking about how to raise capital for other founders. Our focus is all about helping founders becoming investable. There is one more question out there.
And I think for a time, I think this is going to be the very last question.
And this is, there is somebody who's, I don't know, who say, would you back an aggregator removing middlemen or platform that retains middlemen and their livelihood? That seems like a trick question, because I thought disintermediation is the order of the world right now.
Yeah. And I think it depends on situation to situation. Can't comment as such. But no, I was telling you about the InsurTech venture. So like 80 to 90% of insurance is being sold offline. So we still feel there's still a huge opportunity to put all these offline transactions through some sort of a SaaS platform where you build this huge intermediary network, and once you build that intermediary network, I think it's quite phenomenal and very powerful for any. You could co-create a lot of insurance with some of these insurtech players and do more personalized insurance. So it's about building the right sort of network. So ultimately, the POS or the intermediaries are the ones who are selling majority of the insurance. So I think it's very it's subject to various industries, how you're positioning it. So I would not say a no to something. It's very tough to. I would say no to a particular venture, very honestly. I would have my reasons for why I don't believe in that venture. And if I feel that, there's not an opportunity in this, an opportunity in that. So if you're looking at something on those lines and if you pivot, let's talk, So there is no hard no per se, because like I mentioned to you, everyone just keeps changing and pivoting quite a bit.
Absolutely. Absolutely. So I think we are almost at the end of this session. It's been an amazing session, Ntasha. Some last words before we let you go, and I'm going to announce what happens next month.
No, I think this was quite phenomenal, and what you spoke about in terms of digitizing a lot of these memos, it seems like you could save a lot of man-hours trying to make these things and reduce the time frame which is required to the journey to an IC, which requires a lot of preparation and spending time. So I would still believe, no matter how much insights you get, you would still have to sort of be there at the founder's office, get some first-hand insight from there itself. But what you talked about seems quite interesting, and I'd be very happy to know more about this.
Absolutely. And that's precisely why we say we only solve 40% of the problem, which is hardcore numbers. The rest is the chemistry between the venture fund. There are people at the end of the day.
Yeah.
And
I agree. It's a people's business.
Long engagement. It's a long engagement you start. Yeah. So thank you so much, Ntasha. Next session is going to be on 27th of April, and we are inviting Bloom Ventures. You know them very well.
Yes, of course.
They recently had a fantastic exit, apparently. 22x exit, right?
Okay. Which one was this? Purple, yeah.
Yeah?
Purple, yeah. A couple of them did, yeah.
Yeah, I think Vikram got it, and then
Your Mumbai Angels, Vikram, yeah, a lot of them got it.
Yeah. Awesome. Thank you so much, Ntasha. Thank you, and stay safe, stay healthy, and hope to see you soon. And we're going to connect you to so many amazing startups that work with us.
Likewise. Take care. Stay safe.
Thank you so much. Thank you, everyone.
Bye.